Good morning, this is Brian Decker at Decker Retirement Planning with your Market Minute. I want to talk to you about the three biggest, most broadest tax minimization strategies that we use for all our clients. One is by far the most important, that's the Roth conversion. So Roth contributions have limits of $6,000 or $7,000 a year. Deadline is April 15th of the next year. Roth conversions don't have limits anymore. And this is where you look at your estimated gross income on the income plan that we have. Go to the 2021 tax tables online. Look at married filing single, if you're single, married filing jointly, if you're joint spouses, and look at, take out the standard deduction, $12,005 if you're a single, $25,000 if you're married, and subtract that off the top to get your AGI, your adjusted gross income, and then look and see what tax bracket you're in, 22, 24%, 32%. Ideally, we'd like to stay out of the 32% bracket. And so look and see how much you can convert from an IRA to a Roth where you're proactively paying taxes now so that it can grow tax-free, distribute income back to you tax-free, and pass to your beneficiaries tax-free. If we get a $300,000 or $400,000 IRA to $1 million or $2 million, it creates a tax problem. If we can do that in a Roth, it's a beautiful thing. So that's what we want to do, is grow those funds tax-free so that they distribute back to you tax-free. That's the focus. And the difference between paying tax on a $1.5, $2 million IRA that was grown and not is a couple $100,000 in taxes saved by the Roth contribution. That's going to be an important part of the plan. The second part of the plan is tax deferring gains until they're drawn as income. So that's something that we do in the plan in buckets 2, 3, 4, 5, 6. Those are ideally tax deferred accounts. And so we defer taxes until it's needed. And the gains in those accounts each year are deferred with taxes. The last thing is the IUL, the Index Universal Life. That's an account where the AAA municipal bond right now is about 1.3% for a 7 to 10 year rate. The typical rate that we're seeing right now, net of fees for an IUL, Index Universal Life, with a principal guaranteed account where you cannot lose money when the index drops, is over 6%. So that's also an important part of your plan. Any questions on these things? This is the threefold focus for tax minimization. The other parts are minimizing tax on the estate tax at the federal and state level. So those are strategies that we want to comprehensively lower your taxes with. All right, hope you have a great week. Thanks.